So cash budget, as I said, it's actually a functional budget, and it shows the movement of cash, and it will be having receipts and payments method. I mean receipts and payments side. Now, as you can see in the screen, there are basically three methods for preparation of cash budget. The first one, the most important one, that is receipts and payments method. The second one is balance sheet forecast method, and the third one is profit forecast method. Now, as the name indicates, it's no, we can easily understand that the first method divides the budget into two parts. Okay, the first method divides the method into two parts. One talking about receipts, anticipating your receipts, and two, it is your payments. Okay, so that is the method which we are going to learn today. So as I said, it will just look at the total receipts. You will deduct all your total payments that's to be made. And if your receipts are more than your payments, you will have a cash balance. And if your payments, on the other hand, if your payments are more than your receipts, you will have something called as overdrawn or overdrawn facility, because you are spending more than what is happening, what is there in your hand, or what is being accounted as your receipts. So we will just look into the format of receipts and payments method. See, as I said, this is the format of cash budget for 3 months. Okay, for a quarter, it talks about, as you can see in the format, you can see the month of April, May, and June. So this one is prepared for 3 months. It's pre-planned one for the next coming 3 months, right? And generally, if you are a firm which is operating within the market for some time, then you will have an opening balance, right? Because the money which is being brought forward from the previous period, it can be an opening balance, or even it can be in case of overdraft or overdrawn, it will be a negative balance. You are starting with a negative balance, but if you have surplus, you will start with a positive balance, right? And as you see in front of you, there are two parts for the receipts and payments method. That is, first part talks about your receipts. It will account for all our receipts during that period, anticipatory. Okay, because if you are trying to sell your product on cash or credit, you know how much you are going to get, right? So that is anticipatory. And then you have cash payments. Cash payments, which it's maybe our credit purchases, or maybe the payment to other vendors, or it can be like, as we see here, wages, salaries, or tax can be paid in advance also. So all those payments will be accounted for. So you have total A, which talks about the total of your receipts, and then you have total of B, which talks about our payments. And the difference between this receipts and payments will give us the closing balance, which will be taken to the next period. So it's very simple. Only thing is, we really have to anticipate and plan as per the question. That you will understand when I'm discussing an example for this. So today we said we are going to prepare cash budget. Cash budget is a functional budget which is prepared to understand or estimate the movement of cash within your firm in the budgeted period. Right. And there are broadly three methods, right, which I already said. The first method, receipts and payments method. The second is balance sheet forecast method, where you consider the items as it appears in a balance sheet. And the third one is profit forecast method, which is similar but slightly different in its methodological treatment, right? Then we talked about the receipts and payments method. And here, as you can see in the format, the first part will take care of all our receipts. It starts with the opening balance, and the second part takes care of the payments, right? So this is the context where we are trying to solve one exercise, okay? This looks simple. Now, as you can see, you are given with some information, and we are asked to prepare the cash budget, okay? We are given with the balance, the flow, the inflow and outflow from February to June. Okay, And we are given with additional information, and we are asked to prepare the cash budget from April to June. Right, from April to June. Now you might wonder, why are we given with information for February and March also if we are asked to prepare our budget for April to June? That you will understand when we are discussing. Right. So additional information talks about it is here we need to be very careful. All other things are very plain, very direct. We don't have to go with any other calculation, but here we need to be very careful. We have to be very vigilant while we are allocating the amounts to different months. The first one, 50% of credit sales are realized in the month following the sales, and remaining 50% in the second month following. So this here we have to be very careful. Now 50% of the credit sales. So we have to anticipate that the sales has happened on credit. There is no cash sales. Now looking into this question, there is no cash sales. So now what are they saying? 50% of credit sales are realized in the month following the sales. Okay, in the month following the sales, and the remaining 50% in the second month following. So remember, now we are going to prepare from April. Okay, so the sales, the credit sale receipts that will appear in the month of April will definitely be from February and March. It will never be from April. That's it we have to understand, because they said 50% of credit sales are realized in the month following the sales. So if you're talking about April, that will happen. For April, it will happen 50% in May, and next 50% in June. Right. So what we will get here in the month of April will be those coming from March, right? So you imagine February 50% in March and 50% in April. So that second 50% will come here. Now, in case of March, 50% in April and 50% in May. That's how we have to do it with respect to sale. That's where we have to be very careful. Now, the second part, creditors are paid in the month following the month of purchase. Now, this is very simple. It's very direct. They say the payment to the creditors happen in 1 month period. So, if I'm talking about April, the purchases in April will be paid in the month of May. But in April, we will have the purchases from the month of March. March, that will be paid in April. April, it will be paid in May. May, it will be paid in June. That's how it needs to be. Because in the question they said the payment happens in 1 month time. All right. Now, the next additional information for us is wages are paid on the first of very next month. This is simple. Right. As salary we normally get the next month beginning, the same concept here. So a person working for February will be paid in the month of March. A person working for March will be paid in the month of April. That's simple to understand. That's what they said in this question also. And they also said cash at bank on 1/4/2009 estimated, okay, because we are preparing budget well in advance. So they anticipate that the opening balance will be 25,000. Okay, so that's going to be our opening balance. This is actually the aspects which we need to care when we are going to prepare our cash budget. I'm going to repeat the additional information once more because some of you might be having some doubt regarding how did it happen when we are actually showing the answer. So in this particular question, we are given with details regarding our credit sales, credit purchases, wages, and also the opening balance. Now we can see that we are asked to prepare a cash budget for 3 months that started from April. So April, May, June. We are going to prepare for 3 months, right? Now, in the additional information, they have said that 50% of credit sales are realized in the month following the sales. Okay, so we'll start from the beginning. If the sales happens in February, 50% is going to be received in the month of March. Okay, first 50%. Now we will look into what is going to happen for the next 50%. They said the remaining 50% in the second month following. Right. So the second month following would be April. So we need to account for 50% of sales in the month of February for April receipts. Same as the case, we are going to take March. In case of March, 50% is going to happen in April and the rest 50% is going to happen in May. Right. So March credit sales, 50% going to happen in April and May. Right. That's the case with credit receipts. Now, credit payments for our purchases. Creditors are paid in the month following the month of purchase. This is a little more simpler. If it is happening in February, the payment is going to happen in March. If the purchases are happening in March, the payment is going to happen in April. And if the purchases are in April, the payment is going to happen in May. And in case of May, it is going to happen in June. Right. The same case with wages. If it is for the wages for the month of February are paid at the beginning of March. Wages for the month of March are paid at the beginning of April. Likewise, 1 month. That is very simple to understand because it normally happens like that. Either at the end of the month or in the beginning of the next month. In either case, that has to happen. And of course, we are given with the opening balance. Suppose if in your question, if there is no opening balance given, don't bother for that. Don't bother for that. Okay. So let's look at the answer. I hope it is simple. Once you are into that, it is very simple. So this is how we need to prepare cash budget for the period April to June 2019 should be our title. And then here we have an opening balance of 25,000. We had put this, and this is actually a total collection from debtors. It's actually a total of 50% of February and 50% of March. That's how we said. And we have the total receipts. That's it. Nothing more for us, right? Then we have a cash payments, which includes as I said, the payment for purchases happen in the very next month. So in April, March payment happened. Now look at the amount. It is 1,44,000. You can see here 1,44,000. Same as case with wages. March wages will happen in April. So we'll check what is it. It is 14,000. That will happen in April. Right, and this is it, the total. So now we can see that the difference between cash receipts and cash payment for this month is 53,000. It's positive. Our receipts are more than our payments. Now we are transferring this month to, it's a continuous operation. The firm is continuing its operation. So the closing balance of April, because that we know, closing balance of April becomes the opening balance of May. So 53,000 becomes the opening balance of May. Now, the same way as we did for the month of April, 50% of April and 50% of March. That's the total which we get here. We get the total payments and total receipts, and then purchases. Of course, we know the one which comes here will be from April. Let's check whether it is correct. Yeah, 2,43,000. So 2,43,000. Wages, yes, it is from previous month. So April, it is 11,000. So we are putting it 11,000. The total becomes 2,54,000. Now we know that we have an overdrawn amount. Our payments are more than our receipts. So we are transferring a negative opening balance to here. We have to be very careful. We are dealing with negative symbol. So we really have to be very careful with the deductions, right? And here also the same way we get the payment 50% from April, 50% from May, we'll get 1,41,000. And then of course we have a total receipt of 90,000, the difference between these two figures. And purchases, we know that this is actually coming from May. Let's check whether it is like that. Yes, it is coming from May. And of course, this amount is also coming from May, right? 10,000. So we get the total. Here also we have our payments more than our receipts. So again a negative balance, and this negative balance will be transferred to the next quarter, that is to July. This is the method of preparation of cash budget basically on receipts and payments method. It is very simple. Only thing is we have to be very careful with our additional information. If we missed one in that, the entire thing will be wrong.